I think if you look at the interest rate hike in 2022, 2023, was really driven by obviously fighting inflation. That impacted clearly also the change of the dollar, because if you increase the interest rate, then automatically there's more capital inflow and there's less capital outflow, and therefore you see that the currency is appreciating. Now, both elements, the high interest rate and the high currency exchange rate, will have an impact on other countries, obviously. That can be a real economic impact, that, for example, the increase of the interest rate was reducing economic growth in the US, and therefore export from China or export from Thailand or export from Argentina to the US was lower than expected. That's an impact in the real economy. There's also a spillover related to the dollar. So if the dollar is increasing in value, then automatically there is also speculation, mostly in favor of the dollar. That speculators believe that the dollar will increase further, and they are dealing with that, and that automatically has the result that other currencies are depreciating in value, like the Thai baht or like other countries. That may have a positive impact on the economy via export, but it has a dramatic impact if you have debt in US dollars. And your government income is in local currency, and you see an increase in the value of the dollar and a depreciating of your own currency, then servicing the debt is extremely difficult. I would say that volatility is always bad for a country, but also if the country is big enough for the world. So we need a relatively stable interest rate. We need relatively stable exchange rate. And we need to fight speculation, destabilizing speculation. And if that is happening, it will automatically hurt some parts of the global economy. And it is very frustrating that emerging markets, which are already in the perception of speculators, are risky, that they feel mostly this impact. If you look at short-term capital flows, an increase of the interest rate will increase the capital inflow and will reduce the capital outflow. Now, it will increase capital inflow, which means that capital will not go to Argentina, will not go to Malaysia, will not go to Thailand, but that money is flying then clearly to the US. Now, what you can do, you may introduce taxes on capital gains, that you may not leave the country, or the capital cannot leave the country after or within a certain period of time. Or you create such a stable financial infrastructure that you don't see negative speculation. But clearly that is very difficult for many emerging markets in the short term. Now, the advantage of having a reserve currency is clearly that it is relatively easy to spend money and to build up debt, because you don't have to earn money to repay the debt, because you can also print money to repay the debt. And if you are a reserve currency, then of course many countries want to invest in your treasury bonds, and then you can finance your debt very easily. So that's the advantage. There's also a negative side of being or having the reserve currency, and that's of course that a lot of your currency is abroad, is in the hands of non-US entities, and therefore you don't have so much control on that. So if countries are selling part of the dollar holding they have, it will have an impact on the currency value. which you cannot control in a sense. So it is not only positive to have the reserve currency. There are also some negative side steps. So if Mr. Trump indicates
ultimately it kills your dollar and it kills everything the dollar represents, and we have to continue to have that be the world currency, I think it's important. I think it would be losing a war if we lost the dollar as the world currency. I think that would be the equivalent of losing a war.
We want to make sure that the dollar is dominant. He emphasized the advantages, obviously. But what he is saying is hardly a reality. Yeah? If I do business with a US company, and I'm a big client of that US company, and I'm buying products, then of course I will say, I want to buy euros. I want to pay in euros. Because otherwise I run a currency risk. And so please accept my buying in euros. Then you can translate that directly into US dollars, but that is your currency risk. I don't want to get this currency risk by myself. So if Mr. Trump is saying everything should be paid in dollars, then he's saying that the currency risk is all over the world, but not with the US companies. Now, I'm quite sure that a lot of business will not continue in this case. I think what we will see is that in 2022 and 2023, if you look at the enormous increase of interest rate in the US, that attracted a lot of money, and that money was a capital outflow of in all kind of other countries, and that created a burden, that created discomfort, and also it created less funds available for investments. That happened. We saw that, but it is clear that China is not so much dependent on what is happening outside. We are overestimating that always. Also in the West, we think all products are coming from China. So if there are issues related to globalization, China will be extremely impacted. But I think we are making the mistake that we are focusing too much on the export. If we are focusing on the net export minus import, then this net export is of less relevance for China in explaining economic growth. Then the domestic market is much more important. So I think we are overestimating the sensitivity China may have on the global from the global economy. Yeah, being a reserve currency is, of course, what I said, very, very interesting in terms of printing your own money and more or less paying back your debt very easily in that sense. So that's a huge advantage. The disadvantage is clearly that a lot of money is outside the country in the hands of foreigners. And that may be so not only the money, the debt is not in the hands of US pension funds or US equity funds or US companies, but it is in the hands of sovereign wealth funds or state funds in other parts of the world. So we are losing part of that control. And in the whole discussion, but if you look at the whole discussion in the West about how China is trying to increase the use of the renminbi worldwide, maybe we are overestimating this ambition. Of course, what I said, there are advantages, and it is good to have in a bilateral trade flow, bilateral local currencies. So if you have trade between China and Thailand, it is very logical to use the Thai baht and the Chinese renminbi. There's sometimes no need for the dollar. So in that sense, we see more and more the use of local currencies instead of the dollar. But it does not say, I think, that the ambition of the country like China is to become the country with a huge dominant and therefore the reserve currency. Because what I said, there are also disadvantages. I think the dominance of the dollar will gradually disappear. And indeed, if you look at the emergence of trading blocks, including all kinds of currency swap agreements and all kinds of agreements on the use of bilateral currencies or multilateral currencies in the trading bloc, then I expect indeed that certain regions will have certain financial flows in specific currencies related to that regional trading bloc. Of course, in parallel with the dollar. And not all the regions, like the trading bloc in Latin America, I don't think that we will see in short notice the use of all kinds of Latin American currencies in the trade. They will still use the dollar, obviously. But in Asian countries, there is a tendency to use much more in bilateral trade flows, the local currencies. And we will see that. We will see that the dominance of the US dollar in Asia in 10 years from now on will be much smaller than the dominance of the dollar in the trade in Latin America. So you see big differences, and that may be driven by regional trading blocs. In the previous years, the US debt is enormous, is by far the biggest in absolute terms, and that is an issue that cannot continue forever. However, I don't see it as a problem for the short term, and I have a couple of reasons for that. The debt, the US debt, the public debt, is about 100% of GDP. It is big, but it is not extremely big in a sense. Japan has a much higher debt ratio, and there are many countries having a much higher debt ratio. This 100% debt, the public debt as percentage of GDP, is you can pay it back if the money you are borrowing is being used in the correct way. So if you are building bridges, if you are building highways, then obviously you can repay the debt relatively easy. If you use it too much for consumption, for spending by the government, which is not related to investments, then you may question mark how much longer you can do this. But if you invest wisely, 100%, according to me, is not an issue. Furthermore, the interest payments on the debt as percentage of total payments by the government is very small. At the end of the day, you have to repay back the debt, for sure. You have to do it as a private person if you have a mortgage, and you also have to do it as a country, because at the end of the day, there will be a trust issue. But if I look at experiences, how long it takes for the stock market to lower the trust of the US government, we are talking about generations, I think. So I don't expect a debt problem issue in the short term in the US.
姐妹们总烦恼脸上细纹、干燥与暗沉，现在起跟我一起放心交给 KS Royal Face 皇家颜值逆时奇迹系列。KS Royal Face 皇家颜值逆时奇迹系列，它添加5种 EGF， 专门防止肌肤老化，强化皮肤修复，增加肌肤弹性水嫩，轻松抚平皱纹，换回青春自信。KS Royal Face 皇家颜值逆时奇迹，护肤露、全效精华、精华霜，即刻启动冻龄密码。